There are people in this country who own one house. There are people who own 10. There are people who own 10,000 units across 6 states with a staff, a fund, and a net worth that most of us wouldn't believe if we saw it in a headline. Here is the wild part. Every single one of them, at some point, was broke, had nothing, didn't know what a cap rate was, had never signed a lease as a landlord, had never sat across from a lender and asked for a mortgage on a property they would never live in. Every empire in real estate started at level 1. And today, I am going to walk you through every single level, what it looks like, what it costs, what the mistakes are, and what it actually takes to move from one floor to the next. By the end of this video, you'll know exactly where you are and exactly what it takes to get to the next level. Let's go. Welcome to WealthSimplify, where we make money simple enough for anyone to understand. Stick around and watch this whole video, because if you skip even one part, you will miss something important. While you're here, consider subscribing and giving this video a like. It tells the YouTube algorithm that you're serious about improving your money, and YouTube will start showing you more content like this that actually helps you succeed. You found this video for a reason, so make it count. Level 0. The spectator. This is where almost everyone begins, and honestly, most people never leave it. Level 0 investors are not doing nothing, they are watching. They follow real estate accounts. They watch videos like this one. They text their friend links to listings. They scroll Zillow before bed. They know more than they think. They can tell you that the Fed affects mortgage rates. They have a general sense that real estate is a good investment. They have heard the phrase passive income approximately 4,000 times. What they haven't done is made a single financial decision that puts them on the other side of the equation. And here is the brutal truth about level 0. Information without action is just entertainment. You can stay at level 0 for a decade. It feels like progress. You are learning after all. You are staying informed, but the market doesn't care how many videos you watched. It cares what you did with what you learned. The price of admission to level 1 is not knowledge, it's commitment. Level 1, the first deal. This is the hardest level of them all. Not because the math is complicated, because the fear is real. Let's talk about Marcus, 28 years old. He heard about a 2-unit property, a duplex, through a coworker. Working class neighborhood, 2 miles from a hospital that just announced a major expansion. The seller wants $209,000. Both units are rented. Combined rent is $2,000 a month. Marcus does the math 3 times, puts 20% down. That's $41,800, basically everything he has. The mortgage, taxes, and insurance come out to about $1,510 a month. Marcus clears $490 a month after setting aside a repair reserve. Is $490 a month life-changing? No. But here is what is life-changing. 2 strangers are now paying Marcus's mortgage every month. His net worth is climbing, and Marcus now understands something about real estate that no book could have taught. What it actually feels like to own something that produces income while you sleep. Level 1 lessons are first. Learn to read a deal before you fall in love with it. Understand cash flow, mortgage math, and basic property management, and manage the property yourself. Yes, it's work, but the margin you'd pay a property manager is actually tuition, and right now, you need the education more than the convenience. The mistake most level 1s make? Waiting for a perfect deal. There is no perfect deal at level 1. There is just the deal that teaches you the most. Level 2, the small portfolio. Marcus holds that duplex for 18 months. Something interesting happens. The neighborhood improves. A coffee shop opens. A gym. The property appreciates. Not dramatically, but enough. Marcus refinances, pulls out equity, uses it as a down payment on a small single-family rental. Now Marcus has 3 units. 3 units generating about $3,200 a month in gross rent. After expenses and debt service, clearing $800 a month net. This is still not a business, but it is no longer just a lucky break. At level 2, something shifts in the way you think. You start seeing every neighborhood differently. You start asking what rents are in a zip code before you ask what houses cost. You start thinking in terms of returns instead of prices. You also start making the classic level 2 mistakes. The biggest one? Expanding too fast on debt you don't fully understand. The second biggest? Treating the equity in your properties as a bank account instead of fuel for the next move. The difference between a level 2 investor who moves up and one who stays stuck here for 10 years is almost always discipline. Marcus does not touch the cash flow. It goes right back into reserves and savings. The machine keeps building. Level 3. The operator. This is where the game changes completely. Marcus finds a 6-unit apartment building, all rented, strong occupancy, solid neighborhood fundamentals, cap rate of 6.6%, better than the market average. 6 units means a commercial loan, a different kind of lender, a different kind of conversation. Marcus spends 6 weeks underwriting this deal, studying vacancy rates, rent trends, maintenance history, utility costs. Marcus finds 3 things the seller didn't disclose, uses those findings to negotiate $32,000 off the asking price. That's not luck. That's preparation. Marcus closes the deal, hires a part-time property manager, and now operates 9 units across 3 properties. For the first time, Marcus's real estate income crosses $20,000 in a single year. Here's the Level 3 mindset shift. Below 5 units, you're a landlord. Above 5, you're running a business. That distinction changes everything. How you file taxes, how lenders look at you, how you think about scale. Marcus also meets a CPA who specializes in real estate investors. She introduces something called cost segregation and depreciation. Marcus's tax bill drops significantly. That money goes back into the machine. The Level 3 mistake to avoid is thinking that managing 9 units is the same as managing 2. It isn't. Your systems need to grow with your portfolio. If you're still running everything from a notebook, you will crack under the weight. Level 4. The syndicator. Marcus is 37 now. The portfolio has grown. The reputation has built quietly, not from podcasts or posts, but from deals closed, promises kept, and a track record that speaks for itself. A 24-unit apartment complex comes up in a secondary market Marcus has been watching for 2 years. The population is growing, job base expanding, occupancy at 91%, but Marcus believes 2 operational changes can push it to 96% within 14 months. The math works, but Marcus can't do it alone. This is where Level 4 begins. Marcus raises capital from private investors, not strangers, people who have watched Marcus operate for years, people who have capital but not time. Marcus structures the deal, acts as general partner, and closes on the 24 unit. Suddenly, Marcus is managing other people's money, not just his own. This is the most consequential shift in all of real estate investing, because the moment someone gives you capital to deploy, you have a fiduciary responsibility that changes everything. You owe them not just a return, but your full attention and judgment. Level 4 investors are not just buying properties, they are building deals. They are architects of financial structures, not just buyers at a closing table. The mistake here is moving into syndication before your track record is real. Investors can smell inexperience. The best time to syndicate a deal is when you could have done it without them, and you're bringing them in because the deal is too good to leave returns on the table. Level 5. The institution. The portfolio now spans dozens of units across multiple markets, a staff, an asset manager, an in-house CFO, operating funds with outside capital. At this level, Marcus no longer finds deals. Deals find Marcus. Brokers bring off-market opportunities before they hit the MLS. Lenders call proactively. Sellers take Marcus's offer over a higher number from a stranger because they know Marcus closes. That reputation was not bought. It was earned at the rate of 1 kept promise at a time over 15 years. Marcus also launches a small fund, $4 million raised from 12 investors who have watched a decade of consistent returns. 2 value-add multifamily acquisitions follow in adjacent markets. The distinction between investor and operator has completely collapsed. At Level 5, your biggest risk is not a bad deal. It's organizational complexity you outgrow before you're ready for it. The management structure that worked at 30 units cannot handle 300 units. You have to build the plane while flying it. Here is what connects every single one of these levels. No one skipped one. Marcus didn't wake up at Level 4 without going through the terrifying, specific, uncomfortable work of Level 1. There was no shortcut. There was no hack. There was no viral moment that launched him overnight. There was a duplex, a down payment that wiped a savings account clean, a tenant who called at 7 p.m. on a Thursday about the hot water heater. There was the discipline to not spend the cash flow, the study of one market until he knew it better than anyone, the relationships built over coffee and quarterly updates years before anyone needed anything. The levels don't care how smart you are. They don't care how motivated you feel this week after watching a video. They care about what you do when the motivation fades, when the deal is imperfect, when the market shifts and the numbers get uncomfortable. The machine does not run on inspiration. It runs on consistent, specific, unglamorous decisions made over a long period of time. Every empire started at level 0. The question is, how long are you going to stay there? Drop a comment below and tell me, which level are you at right now? If you're at level 0 and ready to move to level 1, tell me that too, because the act of saying it out loud, even in a YouTube comment, is the first step toward making it real. Subscribe to Wealth Simplify if you haven't already. Share this with someone who needs to hear it. And if you want to go deeper on any single level, we've got videos on exactly that. I will see you in the next one.